This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial markets. And today was a more challenging day. As you can tell, if you traded today, you probably know that the conditions were literally sideways and pretty much did nothing. But there was a large gap opening that was pretty obvious. That was obvious for the draw on liquidity. And today, I was kind of split in my approach just because how the day set up showed me my buy model, what I look for to get long, but at the same time, I knew that there was that big fat gap opening below the marketplace that was wide open and likely to get filled. So I was kind of split, kind of indecisive from my market approach, and that was reflected in my decision making intraday, which I'll explain how, and basically just had a break even day. And at the same time, had to deal with some of TradingView's issues that they have with paper trading. I don't know what's going on. I don't know if you all had the same problems, but at 9:30, when you try to set limit orders, it just takes like 30 seconds for it to actually get there. And then by the time it's there, the market's probably doing something that you don't want it to do, and maybe the same idea doesn't look as good to you. So that's what happened to me today. I had to deal with that. And let's get into it. So today's Monday, July 28th. What was the draw on liquidity? So for me, I established smooth highs in the overnight session, left on the range. That price just left lower. But as you can see, I was kind of indecisive, right? Indecisive. But I'm not 100% confident in bias because there's a lot of events coming up this week. So I want to see how 9:30 trades to confirm how it's going to trade to / around that level. So one thing that I've learned from studying all my good trading days and my bad trading days and studying my market approach, my bias that I frame for the day, and the draw and liquidity that I frame for the day, my best sessions, they always come from when I have conviction and price delivering one level, right? So when I'm coming to the market, I got my eyes set on one level that I want to see the market deliver, and I have confidence that it can do that based on my market understanding and experience. Now, sometimes I don't know what it's going to do with that level. Like, for example, if I think this is the draw, right, it could trade up to that level and then reverse lower, or at 9:30 it could drop lower and then I should buy it targeting that level. So depending on how the market trades around that level tells me how I want to trade the market at 9:30. Does that make sense? So that's how I developed like a split approach. Because I've noticed that when I have two draw on liquidities established going into the open, that leads to my worst days. For example, I'm looking for the market to deliver this level above the market price, and I'm looking for market to deliver this level below the market price. Now I'm split between above and below at the same time. What does that lead to? Indecision. Now I can't confidently execute on any idea that or any setup that presents itself intraday. But if I have one level and I'm like, okay, depending on how 9:30 trades, if it does this first, then I want to look to sell it. But if it does this first, then I want to look to buy it, targeting that. So that's what I kind of did today with the level that I established in the overnight session. Pull up the chart. This level was just really clean to me. And if you look on a lower time frame, you can see it's kind of like this consolidation range, right? And the market leaves that lower. So typically when this happens, the market comes back to the consolidation range. Market maker buy model. Market maker buy model. This is the original consolidation, right? It dropped, left those highs perfectly smooth. Above that is buy side liquidity. That's what I target. These are the levels that I aim for when I'm trading. So I use that level. And I'm thinking higher time frame narrative, difficult to determine with all the events coming up and this large gap opening. I lean more what is shown on the lower time frame, but the higher time frame is still bullish. So how is it going to get to / trade around that draw on liquidity? That's what I'm trying to figure out, because there's two elements to bias. Number one, a higher time frame narrative, how that day is likely to paint based on the economic calendar, the weekly chart, and the daily chart. And number two, how is it going to get to the draw on liquidity, which is basically what you're expecting out of price after 9:30 to get to the draw on liquidity or trade around it. Meaning, is it going to drop first and then go for that level, or is it going to trade to the level first then reverse, for example? So I'm not 100% confident in bias because the economic calendar, large gap opening. I want to use a split approach around what I think is the draw on liquidity. See, I'm stating this because I'm not really confident in what to see today. So I'm looking at today, I'm already thinking like, this is not really an ideal trading day. But based on how this is setting up pre-market at 9 o'clock, 9:09 this morning, Eastern Standard Time, I lean towards being bullish, thinking market will drive lower first, below pre-market low. Candle closes on the 15-minute and the 5-minute give me indication it's strong and should be bought. And the alternate idea is seeing pre-market push for that level first, then seeing it drop for a gap fill. So basically both of these played out, because if you see what happened on the chart, first thing market does, it opened up beneath the pre-market low at the low of day, right? Drove below that low, gave me indication that it's strong and should be bought on the 5-minute time frame. This is my entry model down here. And so I technically bought it, but TradingView didn't give me my fill. And I was targeting these highs and never delivered, came back, took the stop for break even. So based on how 930 set up, told me I should be bullish in the opening range in that first hour of trading, because that's my primary focus. I just want to know what the market's going to do in that first hour of trading. That's it. I don't really need anything else. So that's what I was looking for. But at the same time, the sell idea set up too, right? Because it traded for that level. It didn't deliver that level, but it still traded for this gap, rebounced that gap, and then rolled over for the gap fill. So kind of both ideas played out. Number one, how the market opened at 930 set up that long, but at the same time, this made the Judas swing in the morning session, traded to that gap on the hourly time frame, and then it rolled over for the gap fill. So that was my alternate idea. If the market did not take the pre-market low and kind of opened maybe above these lows and then traded for this level here and this level here, then that would tell me that I should be bearish and sell it targeting this. But because it opened below the pre-market low at the low of day, the first thing I did was trade lower, make a new low of day, and fail. Now I want to be bullish targeting these levels. So you can see how I have that split approach based on what 930 does. If it does this, I want to buy it. If it does this, then I want to sell it. So that's how I've developed an optimal split approach that works and it's not really confusing. It's like if 930 does this, you're going to sell it. 930 does that, you're going to buy it. It's pretty easy, pretty self-explanatory. Now when I have two drawn liquidities, like for example, let's say I want to see the market draw for this level. At the same time, I want to see it draw for this level. Then at 930, when the market opens here, then I'm probably thinking it could probably trade up to this gap and then trade lower here, or it could probably trade down and then trade up for that there. But because I know that the market's going to draw here first with confidence, depending on how it trades around this level, it tells me what it should do. So how it's set up below here at the low of day told me it's going to go for that first. But if it's set up around here, did not take this sell side, traded here first, then I would fade it targeting this level. So it's just one level that you know the market is going to draw to, and then framing ideas around that. It took a really long time explaining that, so let's get into the rest of this. Main idea, I want to see pre-market purge sell side, show me an indication it should be bought by targeting that level. I also want to see signs that it's respecting the weak opening gap and showing me strength. And I'm not 100% confident in the idea, right? Because of the gap opening and the weakness pre-market. So that suggests I may want to fill it. So that was what made me kind of indecisive in my execution today, because I have the huge gap opening that I know the market should probably fill. So the better idea was just to wait for the market to rally up first and then sell it. Alternate idea, optional. If the market trades for that level first, then it makes sense for the gap fill. But based on how it's set up, I'll show y'all on the hourly. This basically described what I was looking for. So I believe post 930 it could rebalance to this gap, and I'm not anticipating the 9 o'clock candle to close as a large down close candle. Let's look at the hourly candle at 9 o'clock. Did it close as a large down close candle? No, it did not. One thing that I've noticed going into the open at 930, when the hourly candle is bold face, in this case it was bold face bearish before the open, right? Because 930 opened down here and then it traded up after 930. But the candle opened at 9 o'clock. It opens before the 930 open. So at one point, this was a bold face down close candle. Usually when it's like that before 930, it tends to flip, because the market tends to run against what the market's doing pre-market. So I was not anticipating it to close as a large down close candle. Depending on how it trades to / around this gap will confirm bias and tell me to be bullish or bearish today. With how this is setting up right now, I'm leaning more bullish targeting this gap because it's driving below PM low. So I was targeting that gap from that little annotation there, but I was confident in this delivering, did not get it. So let's go to the recording and check out what happened, right? So before the market opens at 9:28, you can see the time down here, 9:28. I say I'm watching the details down here, and I got the 5 minute because I use the 5 minute to confirm all my trades in the 1 minute. I lead with the 5 minute and I follow with the 1. So how the candles close in the 5 minute around PD arrays, old lows and old highs is going to tell me if I should be a buyer or seller on the 1 minute time frame. So before the market opens, I'm looking for that. And then here's what happened. This thing with trading view. Rewind this a bit. So 9:30 opens, and look. I first add a buy limit order on. It's probably going to take me a really long time to try to find the exact second that everything happened. But basically, See how it just randomly popped up like that? I added that order on there like 15 seconds ago and it just now showed up. And that one just randomly popped up too. Because I added the order there and then it just gets delayed. I don't know if this happened to y'all too. And I'm trying to cancel it because I did not like how this candle just snapped back like that. Like I wanted to see this candle close near this candle's high to make first presentation, right? And buy that, but it didn't do that. Took the high and then immediately started overlapping. I did not like that at all. So at that point in time, I was canceling out the idea of a long. Because of this drop pre-market, I didn't really have confidence in my bullish bias and my market approach. You could see that I was really indecisive in my market approach today, right? So I'm not confident in the reversal being confirmed here at 9:30, though I know that it is. I can't confidently submit to that idea because the weakness pre-market makes me feel like, this thing could go lower, and there's also that big gap that's still open below the market price. So really indecisive in my approach today, and that affects my ability to execute on my ideas confidently intraday. Now this actually worked. Like I got a fill here on accident. Like the idea should have been canceled, right? I canceled it right away. And then I canceled it as soon as I could. Like I was spamming the X button. Like this is really frustrating. This happened to me another day too. Like I'm spamming the button and it's just not going. And then eventually I'm tagged in. So it's like, I did not count this execution, but I did count an execution where I marketed it in after the long idea was definitely confirmed to me, and I'll clarify why. Let's go back to the chart. Okay. So back to the 5 minute. I wasn't confident in executing on the 1 minute within this candle, right? Let's split this up real quick. Split this shit up real quick. Okay, look. So here, 9:30 large up candle. See how it opened, dropped down, made a new low day, large up candle back inside the range. That confirms a reversal for me. I wasn't able to confidently execute on that and pulled my limit order off, or at least I should have, but TradingView geeked out because of these large gaps right here and what happened pre-market, and because of, hold on, I'm all out of whack right here. I'm trying to move myself. All right, there we go. So opens, drops lower, new low a day, large up candle back inside the range. That confirms the reversal for me. That's what I want to see, right? And then I set my limit order out here. I did not like how this candle took that high and then immediately came back down. I tried to cancel my buy limit order. TradingView had that glitch, couldn't do it. Accidentally got filled, canceled it as soon as I could. Did not count that trade because if TradingView was working as it should, I would have just canceled the limit order. Wouldn't have been a trade on. Can't trust this because of these large gaps right here. So what happens pre-market is kind of making me indecisive on the setups that I'm taking intraday. Now this is a problem that I have. This is definitely a constraint in my trading that I have to eliminate because, what I'm working on right now, my main focus is conviction and draw on liquidity. One level, go for that. That's it. Most of the time, it doesn't even have to be right. Like the market still affords enough range for you to take it there without that even being the real move of the day. Like I don't have to catch the real move of the day, I just need something that affords me like 50 handles. That's kind of what I'm aiming for. I can do that consistently. Then I can work my way up towards, trying to catch the real swing of the AM session. But why I viewed this as a valid long was because we had this solid up candle on the 5 minute time frame, right? That overlapped this down candle. So that becomes bullish order block. And then the following candle closes like this, where the body is just really in the middle of the range. That tells me that the market is comfortable where it's at, and it's not going to go lower. So once I get this close after the large up candle that overlapped the down candle at 9:30, the following close tells me the market's sitting pretty comfortable here. It's not interested in going lower. So I can look to potentially buy the market on a drive below this candle's low. That's my turtle soup entry model that I've kind of just grown into based on the things that I've seen happen over and over and over again. So I can anticipate a drive below that candle's low to fail, and it does here, right? This is the following 5 minute. So this is the last 5 minute candle. This is how it painted, 940 to, that's the new 5 minute candle. This 939 to 935. This is that previous 5 minute candle's range right here, right? And based on how it closed in the 5 minute time frame, how it left this lower wick, I'm anticipating a drive below that low to fail. So I annotate that low. The first thing the next 5 minute candle does is it opens, trades below this candle's low, the previous 5-minute candle's low that I'm already anticipating a drive below to fail, and it closed back up inside the range. The next candle opens, trades down, cannot overlap this wick, and also close back above the previous 5-minute candle's range low. That confirms the reversal for me. That confirms the long for me. So I buy at the market, and I have this on recording too because I literally click the buy market order button, but it doesn't do anything. If you look, this is what's happening in real time, right? So I'm watching this. May have to let it push away from these gaps at the same time. How it trades under this low will tell me what it wants to do. If you can see my annotations here. See if I can zoom in a bit more. Come on, CapCut. How it trades under this low will tell me what it wants to do. So based on how the 1-minute candles did this, right? When they did this, they dropped below that candle's low but closed above it. That tells me the market is bullish and should be bought, which is what I did. But if we look, I literally click the buy market order. Like you can see it, how it goes dark like that. So I'm clicking it and it just didn't do anything. I never got filled or anything. So I was like, the fuck? Okay. Go back to TradeZella. So, I mean, this was just like a really challenging session. 9:35, I did not like how price snapped back on the second 1-minute candle. But like the first 1-minute like the first 9:30 candle, but I like, there we go. That makes sense. I did not like how price snapped back on the second 1-minute candle, but I like the first 9:30 candle, which is why I put the limit order out there, but canceled it. It's difficult for me to buy with these large SIBs. I'm buying right back into, but the setup looks good. I think I'll have to let it push away from these gaps. The weakness pre-market is making me lack conviction on my long idea. Market is also moving very slow, not optimal conditions to trade. And then that happens with me, so I was like, dude, what the fuck is going on in this session? Trading view is fucking geeking and conditions are not optimal. This is ass, not really interested anymore. I should be in a long right now, but it literally just didn't do anything, and that glitch is probably going to save my ass. So you can tell, like, I lacked so much conviction in that long idea that I thought that even if I did get put into that trade, then I would have got stopped out here. But I knew that if this ended up delivering my take profit, then I would have manually inputted the trade data and counted that as a win. So I knew that regardless of the outcome of this trade, I had to input it anyways. And as the market's trading up here, I would definitely move my stop loss to break even, because why would I want it to see come back all the way down here? I'm noting this trend line liquidity. I'm thinking that's not ideal for this to play out. This tells me that it could get faded at one point in time, and I annotate that. This is not optimal. It could be faded at some point, but I don't think it will be until the market delivers the draw on liquidity, right? So I'm extremely confident that it's going to go here, but I don't like how this is developing trend line liquidity. Typical pre-FOMC delivery. This delivery makes it seem like it's going to reverse at any time. So I'm sitting in this long that I should be in, thinking it's probably going to reverse, and then eventually it reaches a point where I'm like, I'm absolutely going to trail my stop to break even. Let's see if I can find it. Stop would 100% be moved to break even right after I'm seeing it drive above this high and start to fail in the 1 hour gap. Comes just shy of that, right? Starts to turn back inside the range. Not a good sign. And then it would hypothetically come back and knock me out for break even if I took that trade. And here's a picture of me. Pretty cool. Okay, it's not letting me open that either, but challenging fucking session, as you can tell. Lacking conviction just because of what the pre-market is doing, So, constraint identified. How pre-market trades, it's making me lack conviction in my setups, in my trades intraday. So, what do I learn? You can see that after I have a challenging day, I will sit here and I will fucking extract every possible lesson that I can about that session so that I can grow the most, because the challenging trading days are going to present the most opportunity for growth. One thing that I've learned is that when I have a solid trading day, I don't fucking learn anything. I just do what I know I need to be doing. When I have the shitty trading days, that's when the market presents, or the market puts me in a situation where I fail, and that presents the opportunity for growth. So that's just how this shit works, Now, obviously today's not a good trading day, but it's still not a red day. Risk is managed regardless. It's not a day that I should be even trading on. If you look at the economic calendar, let's look at the economic calendar. Where is it? It's pulled up. calendar. Okay, Monday, today, what is there? Nothing. There's really fucking nothing. But what do you have tomorrow? Jolts, consumer confidence. What do we have on Wednesday? Like, look at this economic calendar. This shit's crazy. We have GDP and FOMC on the same day. We have PCE the day after that. And then we have NFP on Friday. We have FOMC, NFP, GDP, and PCE all in 1 week. So it's like they just decided to just fucking throw everything in 1 week. And they're probably going to stir up the market a lot. So waiting for that later in this week. Now, conditions are probably not going to be optimal tomorrow either, but this is a good day to study for day selection, right? Is it worth putting on any kind of risk at all in these conditions? No, it's not. Why? Because high resistance days, the risk does not make sense at all. Since days that are high resistance tend to lack a range because there's no volatility and stops have to be compensated for deeper retracements, and market is very likely to have deeper retracement before delivering my objective, the risk on these kind of days is not optimal. There's 3 different factors that skew the R and make it much less favorable than an ideal trading day. Risking more to make less on a high resistance condition day. So from what I've noticed, you see how this market has so many retracements before it ever delivers that 1 hour gap, right? It's high resistance conditions. So if you're trading high resistance conditions, your stop has to tolerate deeper retracements because that's just how it delivers. The market is facing high resistance, delivering the draw on liquidity. So you have to tolerate deep retracements, which means you have to use a wider stop. And days that are high resistance tend to lack volatility, which means it's a smaller range. If you frame this range from high to low right here, it's only going to be 65 handles. That's it. So not only is there a smaller range, which means I don't have a target that's going to afford me more points, but the stop has to be wider to tolerate deeper retracements. So there has to be wider risk on the position and a smaller target. So the risk is just not optimal on these days at all, which shows you a good lesson about day selection. Like, these are the kind of days that you gotta eliminate. So I think that's gonna be about it for this video. We're crossing 20 minutes long. Got some good feedback on the last piece of content that I made. That was literally just a raw video of me sitting talking about success and what this shit actually takes to achieve success. I've 10x my mindset last week, and I've gotten to a point where I'm so iron mind that I could literally sit here at my desk and work all fucking day and love every single second of it. I've programmed myself to receive satisfaction and dopamine from completing the work that I know I need to take in order to get to where I want to be, to become the man that I want to become. So I'm reaching a point of iron mind, just pure iron mind, where I'm fucking grinding and I'm loving every single second of it. I don't want to do anything else. I have a vacation coming up this weekend. It's like a 3-day trip, do some bullshit. I don't even want to do that, bro. I just want to sit here and I just want to grow and get better. I'm in a period of self-development right now that I'm so insanely addicted to that I don't want to do anything else. So it's getting really fun. Life is getting really fun. I'm still not making any fucking money, but I'm so in love with the process, the day-to-day process, and the self-development. It's addicting. Like, this shit is addicting. Like, I'm telling you, once you know where you're going, once you know the man that you want to become, and you work towards that steadily every single fucking day, that is when life gets fun. When you're pursuing your passion, when you're pursuing your purpose, and you know that you're consistently growing every day, the work becomes addicting. And instead of being addicted to scrolling on social media or however else you waste your time, you're addicted to putting in work for self-development to unlock who you know you should become. So it's getting fun, man. This shit's getting really fun. Now, for the rest of this month, we're going to try to finish the month green. Not try, we are. We don't try, we are. We don't try, we do, right? Tomorrow is probably not going to be ideal. Wednesday is probably not going to be ideal. Thursday, hopefully conditions can clean up a bit. And that'll probably where I'll put my focus, and that'll cap this month. So that's going to be it for this video. It's 24 minutes long. I appreciate you for sticking by, those who consistently support me and subscribe to the channel and grow the community. Appreciate the support. We're consistently growing. I just hit 800 subscribers like the other day, and I think we're already at like 815. So shit's starting to happen fast. It's starting to multiply, and it's getting really fun. So life is fucking great. You know, you got to have a great attitude towards life. Build the life that you fucking want. I am building the life that I want. You should too. You can too. You are capable. I am capable. We're all fucking capable. Why not we just all just go out there and kill it? You know, that would be great. That would be pretty fun, wouldn't it? I think that'd be pretty fun. All right. Goodbye.